earnings. Now, there's support for stocks right now because of earnings. Now, once we start getting through really this week, next week, you're going to kind of get into a return of focus back to the economic data, and that's where you're most susceptible once we get into August and September. So July will be okay, most likely for the markets, but once we get through the month of July, really get into August, September, we're going to really have to start focusing back on the economic data, which, as I said before, is not great. It's not terrible, but it's not fantastic. So again, that kind of opens up the most likely probability that we get some type of a corrective action here in August, September. A little bit about what you need to know before the bell this morning. I'll spit that out here in a second. Futures are, again, kind of pointing up mildly this morning. We'll kind of see how the market holds together today. You know, markets are overbought. We are still very extended above moving averages. And again, that's not, out of the ordinary. It's not a crisis situation type thing. But we are very extended on both momentum basis. Relative strength improved on Friday, had that rally that gave up some of its gains. We kind of broke out to new all-time highs on Friday, Thursday and Friday, pulled that back a little bit on Friday. So we're still flirting with all-time highs right now. But again, the deviation here, as we've talked about before, is important to pay attention to because moving averages are a little bit like gravity. And the further that prices get away from it, there's kind of that gravitational force that wants to pull it back down to earth, so to speak. And so when you get these kind of big gaps that you have right now, and again, we're about 6% above the 200-day moving average, that, that provides that potential area where you kind of get an air pocket that, kind of pulls stocks back to earth. Now, there's support for stocks right now because of earnings. Now, once we start getting through really this week, next week, you're going to kind of get into a return of focus back to the economic data, and that's where you're most susceptible once we get into August and September. So July will be okay, most likely for the markets, but once we get through the month of July, really get into August, September, we're going to really have to start focusing back on the economic data, which, as I said before, is not great. It's not terrible, but it's not fantastic. So again, that kind of opens up the most likely probability that we get some type of a corrective action here in August, September. And again, a pullback to the 200-day moving average, at least, if not the 200-day moving average, which, again, there's a fairly big gap there. But even a pullback to the 50-day moving average would get you back down to about 60-10 on the index. So, about a 3% correction. It's not the end of the world, but a 3 to 5% correction, investors should kind of expect that sometime this year. They'll kind of reset some of these overbought conditions, reverse some of that momentum. Brent has not been exceptionally strong here during this rally either. So again, there's a few of these catalysts that are sitting there that suggest you get some type of corrective action. We talked about this last week, raise some, and I wrote about this in the newsletter, by the way. If you go to our website, realinvestmentadvice.com, download this week's Bull Bear Report. I've got a whole long list of kind of tactical ideas for your portfolio, just kind of actions to take. But again, it's the basic rules right here of just taking profits, rebalancing risk, looking for a bit of a correction that you can then allocate some cash back to markets. But again, overall, the market's in good position. Nothing really going wrong here, just a little bit overdone. And again, today's article on the website, and by the way, you can get our articles at our website, realinvestmentadvice.com, of course. But if you subscribe to at Lance Roberts on Substack, they get emailed to you as well. So just come right to your inbox. Today's article, and we'll go through this a little bit in a few minutes, just talk about retail speculation. We're starting to see some of the same signs that we saw back in 2020 and 2021, which also kind of feeds into this narrative that you're getting a little bit overdone here in the short term in the markets. So some type of corrective action should be expected. Outside of that, again, volatility remains exceptionally low here. We're trading around 16, 17 on the VIX. Again, that's not historically low, right? I mean, we've been lower on the VIX before, but volatility is very compressed here. There's a huge sign of just complacency in markets, and again, that's kind of another caveat. Again, just you're kind of getting a position where we also get into the seasonally strong period for volatility, which is August, September. And that, so if you get a rise here in the VIX, that's also going to correlate to a correction in the markets as well. So again, just nothing dramatic here. Just pay attention to your portfolio at the moment. Again, nothing going wrong here. Earnings are going to drive markets this week. We'll see how that turns out. We'll keep you updated. But that's what you need to know before the bell this morning.